I think most people haven't put in the time to understand what it is. I think they um, keep in mind that when you go on YouTube, let's say you search for Bitcoin, what are the first results going to be? It's going to be like extravagant news, huge news, big news,
Yeah.
breaking news, right? It's just like
Huge crypto
people,
channel or something. Yeah. Yeah.
yeah, right. Like, and it doesn't, or Bitcoin about to crash, Bitcoin about to skyrocket, Bitcoin going to 100x, Bitcoin down 99%. It's just gonna be all
Yeah.
that kind of stuff. So if you just search for Bitcoin and you look at what Bitcoin is on YouTube, it'll give you a different perspective. And I think that's what most people do now. YouTube is a massive search engine. A lot of people go on YouTube and they learn. But if you like, let's say if you read a book like the Bitcoin Standard, or the one that's behind you, The Price of Tomorrow,
Hmm.
the bullish case for Bitcoin. If you read those books, it gives you a completely different perspective because the YouTube guys. I try to avoid that. I don't talk about, oh, Bitcoin's going to $1 billion. I know you avoid that as well, but we're
Hmm.
not going to be coming up on the first page, because the
Right.
ones that come up on the first page are the ones who get the most clicks, the ones who spread fear, uncertainty, and doubt, the ones who make people think that Bitcoin is going, like they're making weird faces on their thumbnails, and thankfully we don't do that. But of course, our results are proportionate to it, right? Because
Hmm.
if we don't make those faces, people aren't going to click as much. But I think the substance there is that um, most people don't. Most people just think of Bitcoin as a gamble. They think of it as a short term asset. They don't think of it as something that they can hold for 50 years. I After it took me a long time to figure it out. Most people won't have 4 years to spend studying Bitcoin. Most people won't have even an hour to spend studying Bitcoin. Actually, they have it. They just don't want to use it to study Bitcoin. They want to watch a show on TV. They want to listen to music. They want to go to a bar, right? Those are the things that people want. They don't want to spend their time reading books, right? I think that's part of the reason why a lot of people don't get it. If you just think of Bitcoin as a short term gamble, of course you're not going to buy it. You're going to think that's going to go down. A lot of people are so worried about the volatility. And then one crazy thing here is that I've noticed every time I buy Bitcoin, it finds a way to come down. I've come to terms with it. I don't really care anymore. It doesn't matter what Bitcoin's price is when I buy it. If I have extra cash, I'm going to buy Bitcoin, right? If but to me, I've understood that if I buy Bitcoin, I expect to feel stupid for 4 years, and the
Hmm.
reason for that is that I know it's going to be volatile. I know that the price is going to fluctuate, and there's this really. I think more recently I started talking about this chart, and I found this through. I actually searched for this after seeing some content from. Do you know who Oliver Velez is?
Yes.
Yes. So
Yep.
he talks about the 4 year moving average price of Bitcoin. And this is something that I've been talking about a lot in my videos, where if you just look at at the price at the end of the day of Bitcoin, it's going to seem
Hmm.
scary. Like you're going to feel like, oh, I need to time it. I need to buy the lows, sell the highs, buy the lows, sell the high, buy the low, sell the high, buy the low, sell the high. But
Yep.
when you look at the 4 year moving average, the way that I see it, this is a distraction. The price of Bitcoin is a distraction. The way that I see it, get rid of the price at the end of the day and look at the 4 year moving average. This is why I say this is where I came to that conclusion that if I buy Bitcoin, I'm going to feel stupid for 4 years, but after that 4 year period, I'll be fine. This is the
Hmm.
4 year moving average price of Bitcoin. And for the people who don't know what this is, a lot of people don't. I've spoken to people, I've asked them, do you understand what this is? They don't. So let me just explain that quickly. Basically, the 4 year moving average is the average price for the last 1,458 days. So it averages 1,458 days. So the last 1,458 days will be averaged and you'll get one price. And that's what you get with this line here. So what happens is the oldest price, day number 1,459, is removed, and then you replace it with, let's say, today's price.
Hmm.
So over time, what you see here is that Bitcoin's price is just going up. It just keeps going up. Why would you want to why would you want to trade in and out? Why would you want to gamble on this thing? Just like I said, all you have to do is buy it and hold it for 4 years and you're good. That's it. Put in money that you need for 4 years, avoid the leak from the legacy financial system, avoid the inflation leak, and avoid the fees, Like if you have your money in a 401k, a lot of people, they fall for the 401k scam because they see that they get 100% upfront reward from their employer. Like their employer will match it. But the thing is that over the next 30, 40, 50 years, you're paying massive fees to Wall Street. Instead of paying, let's say, a 0.1% with VOO, you're paying 2%. And that adds up very, very quickly. But they don't quite understand that. Most people don't quite understand that because they don't see how 2% a year can add up to 50, 60% of your portfolio over a few years. And basically what they're doing is they're giving up these kinds of returns, this kind of return. They're locking their money up in a 401k, and they're losing out on Bitcoin's growth. They're losing out on the growth of the S&P 500, and they're just putting money, or actually, I don't even think the S&P 500 is worth buying anymore. They're missing out on Bitcoin's returns, and they're paying massive fees because their employer has convinced them that, or the not even their employer, but the finance community, the finance industry has convinced them that the 401k is the best way to go. So don't zoom in. Don't look at the day-to-day price. Stop looking at this. This is a distraction. Once you get rid of the distraction, so this is the colorful stuff is a distraction. Once you get rid of that distraction, this is what you get. This is what you should be focusing on. Focus on the long term. Focus on 4 years. If you can't, you probably shouldn't be buying Bitcoin.
It's funny you say that, because that was one of the big things that orange pilled me was, the network effect in essence. So kind of what you're, the log chart, and also, like you said, the moving averages, and seeing these really zoomed out views of things. And the old investing adage, as you well know, is the trend is your friend. And it's opposite. I mean, you look at you invert that or flip it upside down, and it's the currency printing, right? We go back to this debasement thing of, for whatever reason, the average person cannot wrap their heads around the fact that the currency is being debased. 1 Bitcoin equals 1 Bitcoin. The same 3-bedroom, 2-bath ranch is the same one from 40, 50 years ago, but now it's worth 10x the dollars. You have to find 10 times more dollars so yeah, there you go. Exactly. It's like that's what's fascinating to me, is that you're fighting this trend. And so I try to ask people as well, like, do you think we're 37 trillion in debt? Do you think that that's going to speed up or slow down? Like, do you think this trend, all of a sudden we've lost 99% of the purchasing power since 1913? Do you think that's going to go the other way all of a sudden? And that's where it's like, so I'd love for you to touch on all this, but also like it's like this weird paradox where it's hard for the average person, again, to see that the more that the government prints, like, because that's the thing, like, everyone pretty much to a T, you could get 100 people and 99 would be like, yeah, the government's got to print. We're going to get more debt. It's just like, it is what it is. We're America, blah, blah, blah. Yeah, they think it's good almost. It's like, well, we're the dominant, blah, 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 whatever. But it's like, why? How do you not then make that logical assumption that, like, wait, this thing's finite. It's going to keep sucking up all of this liquidity. You keep spewing more liquidity into the air. What do you think is going to happen to Bitcoin, this asset here that's just sitting here? I'm like, yeah, I'm going to suck all that up, and it's going to take more of these dollars now to find the same Bitcoin. I don't get it. I don't understand.
Yeah. So I think one thing that the one thing that I like to think of is the U.S. government's debt. Again, like you said, $37 trillion. Is it going to speed up? Of course, because if our expenses are going up, so I was looking at a hotel in Montreal a couple weeks from now, and it's like $400 a night.
Jeez, yeah.
Everything is getting more expensive, like literally everything. So if things are getting expensive for us, they're getting more expensive for the U.S. government as well. As the value of that U.S. dollar decreases, they need to print more of it to buy the same thing.
If you're ready for your next piece of education, go click on this video here. However, if you're ready to take action on all the education you have seen, then go to our links right below. Get your hardware wallet from Foundation, $10 off. Go get your seed phrase from that wallet and put it into titanium from Stampseed, 15% off. And then go to the Bitcoin Way. Check them out, because they are going to be the team to walk you through everything.